Hey, it's a local spotlight show here at WJBM Studios in Jerseyville, Illinois, the voice of the Tri-Counties. I am Chris Lorton. I am your host today. And before I introduce my next guest, I just want to let you know if, you enjoy the spotlight show and you missed one, or you want to go back and see see a few that you didn't miss, you can go to our webpage, go to Listen on Demand, and we have I don't know, hundreds of them on there. A lot of them, 370, I think, something like that. So we got those. And then also we're doing them on YouTube. So you can go to WJBM YouTube and you can actually watch and listen. So now my guest, Ray Roentz, Heneghan, White, Cutting, and Roentz Insurance Company. Welcome, Ray.
Thank you. Glad to be here.
Yeah. And I guess, of course you graduated from Jersey County, right?
Mm-hmm.
Yeah.
96.
And on to college, where'd you go?
I went out to Kansas City, out in Avila. I think it was called college back then, but it's now a university. So probably extra letters, no more tuition, I guess now probably. But
Why did you end up way out there?
They gave me the most money to play baseball. So. That's probably not actually 100% true. There was a college in Georgia that gave me some money, too, to go down there. But, Avila gave me the full ride out there to play ball. And, it was a good experience for a while out there. Yeah.
What position did you play?
Oh, well, geez, anybody knows.
Everything?
Yeah, at that time, it was a utility. They called it a super utility guy is what you would call it today. Back then, I was a disgruntled shortstop. And so I was recruited as a shortstop out there. And then just like any other second baseman's, They were once shortstops, and then they find out that there's somebody on that team that throws about 95 across a diamond, and you go, all right, so who's playing second? And so you end up I found myself at second, and then I found myself at center field, second, third. I played funny to me, I started every position in college except actually first base and catcher. At the time, I hated it because I was like, okay, that means basically I wasn't good enough to start anywhere, but also probably good enough not to really tank a position or really be bad at it, and it could keep me in the lineup, and I could hit and all that good stuff.
You could pitch, huh?
I even pitched. Probably I was one of those, in case of emergency, break glass and wake Ray up and see if we can go throw a little bit. How things go in the season, nothing always goes right all the time, with that number of games. But did all right, actually, surprisingly. I didn't have the velo anymore, and, I didn't have the arm strength that played well down here when I was younger. But, so I played, and it ended up working out well, actually, as a utility guy. I learned a lot. I had some good coaches, and that were very helpful.
What'd you get a degree in?
Biology, actually, is what I finished in, biology. Mm-hmm.
Yeah, and did you do any work in biology? I mean, you're in the insurance business now, right?
Yeah, it's quite a switch, I know.
Yeah, so biology, where'd you go?
So biology interested me, basically. So I once I graduated out of biology, worked locally for a little while, worked with some of my friends, actually. IDNR, INHS, did a lot of the river, basically did a lot of work on the river, did a lot of grunt field work, the stuff that that nobody really looks as glamorous, fun work. Did a lot of that, and I ended up in Alaska. Worked out there as a marine biologist. That was probably my first kind of out of the area big boy job, and went on those boats out there, actually the old fishing boat fleet type thing.
Were you single back then? Back in Alaska?
I was not married, but now my wife was, my wife. Sorry, YouTube. She was back home waiting patiently for me, probably saying, when's he going to grow up and come back to the Illinois? But I married my high school sweetheart, Carla. Carla Vagey was actually out of Wentzville, so shout out to my wife. But she was from Wentzville, came to the area. And
no, but when you were in Alaska, you were engaged or were you married? No,
I didn't have enough money. Basically, I would have had to buy her a silicone ring, I think, at that point.
Okay.
No, so
she was just waiting patiently.
Waiting patiently, yes.
And come back home.
Yes. What's I hope so. No, she was. It was hard back then, actually. Those were the hard things. It didn't like today. We could just pick up a cell phone and call. There's no. That was still the old days. That was 2001, 2002. We weren't cell phone towers, and so you had to use sat phone.
If you could have made good money, would you have stayed in Alaska?
I was making good money there. Yeah, I liked it. I think a guy can survive pretty well. A small town guy can do all right in Alaska because you're used to being self-reliant. It's a tough environment. The people there pretty much like to keep to themselves. Kind of pretty tough, like kind of way of living. You know, the winters can be long and hard, but by and large, like most of the guys who have lived there for a while, they recognize the guys who can hack it there and guys who can't. Yeah, I had offers to go work on a boat, and so my life would have took a big turn if I had because I had, after working out there for I think about 2 seasons, I was offered a share on a boat, and that's how you get on there, where you get a half share, you get a 3/4 share, basically, of the profits off of a boat, whatever they catch on their catching. You can make real good money. You work about 6 months out of the year.
What are you doing on the boat? What's your job?
As a
because
biologist,
you're not actually fishing, right?
No, I wasn't fishing. As a biologist, your job was essentially to take samples, so samples of the catch. I know this is not probably interesting to everybody, but so think of your filet-o-fish in McDonald's, okay? That's pollock is what that fish is. And so a lot of the boats I was on was a fishing boat that was after pollock. Well, it fishes by a net, and so, or cod, same way. Well, a net doesn't care what it catches. It catches a lot of other things. And so it'll pull up salmon, it'll pull up halibut and other things that have an actual viable fishery that other fishermen basically are making money off of that fish too. And so in order to keep the fisheries healthy, basically, they have a biologist like me that's contracted on there to catch these boats, take a sample ratio of this catch, would say they caught 10 tons of fish. I take a sample of this at different increments and times, it has to be completely random, and then I measure and weigh these fish and say, well, out of 10 tons, they may have caught, let's say, 500 pounds of salmon, king salmon or something. So I have to identify these fish, weigh them, and basically, and that's how they distinguish, or how they determine the length of the seasons, how short it is or how long it is. And so if you catch too much salmon and you're trying to fish for cod, you're shorting the cod season down because you've overcaught a bycatch limit on halibut or salmon or whatever type of, let's say, fish for profit, a viable fishery would be. It's not like crabbing in the old days, like when everyone was watching the crab. That's a derby. You catch as much as you can catch over those 5 days, and that's pretty much it. But the fishing stuff is
when you got tired of out there fishing, and did you come back to Jerseyville?
It was like a 3-month contract. So if they could work you like 3 months straight, the first contract I was out there for like 5.5 months straight. And, where you were on the boat all the time. And if they can work you all those days, they'll work you all those days straight. No time off. You're on call 24/7. And so they pay you well for that service. And it's a little dangerous here or there, but not. I don't want to overdo it and act like, hey, I was risking life and limb every single day.
Well, being an insurance agent is kind of dangerous at times.
It can be.
When we're talking about claims, right?
It can be. I'm maybe making a mistake with my window. My back is toward the window at my office, so I might need to rethink that.
Now, so you come back and you end up working for Miller's? Is that it?
No, I came back and I worked for AIG. So when I came back from Alaska, kind of stayed in the biology realm for a little while. But once again, it just kind of over time, so I knew who I wanted to marry, knew what kind of life I kind of wanted to. I was a biologist that discovered there's not a lot of money in biology, as I kind of say, and so not to be able to raise a family and kind of live a I would say at least a middle class life, and so I went to private sector.
Yeah, and now AIG, what's that stand for?
American Insurance Group. Associated Insurance Group, the biggest, still the biggest insurer I think in the world. So through a series of basically jobs, I found myself at AIG as a pollution underwriter.
Underwriter?
Yes.
I'll be darned.
Yeah. It's
because of your biology background?
That was actually that was why. They wanted 3 things from their candidate. That next person, they were having a hard time filling it. I guess that's how they settled on me. But they wanted somebody who had a business acumen and who knew insurance and was an environmental geek that knew all the regs and state stuff. I knew nothing about insurance at the time.
About everything else.
Yeah, I was like, well, 2 out of 3 ain't bad. So I was like, okay, we can teach this kid insurance, but he knows the environmental stuff. He knows the state regs. He knows how to work around these kind of problems and issues. And I had somewhat of a business acumen, on my resume. And so they hired him to teach me insurance. And I found I really loved the insurance side. The insurance side was fascinating, loved it, loved how all the gears worked, liked that side of it.
I'll be done.
But and so I was a lot more than I like biology, and so that's how I found myself in insurance. Like, hey, this is what I want to do.
All right.
I found like, hey, this is my career. Yeah.
And so then what happened? How'd you get
after
Jerseyville?
Yeah, so how I got back to Jerseyville. AIG had a little bit of a problem. If you think back 2009, 10-ish, Yeah, I think it was around 9 or 10. They had a little bonus issue they had where basically they were taking government money from the bailout that happened under the Obama's term, and then had to, well, it was actually Bush, yeah, the TARP. And then they, that spilled over where they actually had kind of an issue where public wasn't too keen on them basically giving out bonuses to their C executives that had to by contract, but still not a good look. And so they also had more problems and had to lay off a bunch of people. And I was one of the 400 or 500 lucky ones that got laid off, So my division was pretty small, but, that was another lesson why I didn't want to go, why I wanted to stay away from corporate, I guess is how I would say it, because I did well, had a big book, but if you got to trim 30% of your salary.
Doesn't matter.
Yeah, it doesn't matter. And we look around and go, well, who's that? Well, we can just get rid of Ray. They'll take care of that 30%. So we got this other person we're paying less. And so, that's how it actually ended up happening. But that was probably one of the best things that ever happened to me.
Yeah. Isn't that great?
I walked out holding my box, already had my boxes packed and whistling and just kind of, okay, what's the severance package? And
see you
thanks,
later.
Appreciate it. But I'm going to go do something else and I'm going to be an insurance agent.
Hey, if you're just joining us, I have Ray Roentz with us. He's a local insurance man here in town, and we haven't talked much about insurance yet, but we're getting ready to.
That's my fault.
Yeah,
Sorry.
no, you're fine. Love it. So then you got into insurance and you started with Miller Mutual?
Jeff Miller actually was working with Joe and Steve Rice at the time. Joe Heneghan had bought out Steve Rice's agency, which was White Cutting and Rice. Mm-hmm. And then Steve Rice had bought out Paul Miller's agency, which Jeff was his son, if you remember Jeff Miller. Mm-hmm. Jeff Miller became ill due to cancer. Love Jeff. I didn't get to work with him much. I just knew him actually through his children. Actually, was Robin Miller, unfortunately passed away too at a much earlier age. Her and I were the same age. So I knew Jeff when I was probably like a kid, because I was the same age as his daughter, Robin. And so
I knew Jeff. I had insurance with him. Mm-hmm. He was a good guy.
Yeah, he was a real good guy. Really nice guy.
Nice
Loved the Cardinals, that kind of stuff.
Good dude.
I never got to work him in a professional sense. So anyway, he was, to wrap it up, I guess, to make it quick, he contracted cancer and then couldn't work anymore. Joe Heneghan needed somebody to come in and write, be an agent. And I obviously had the insurance experience, was already licensed, had all the information. And that's how Joe had the situation exactly what I was looking for. I wanted to kind of get some seasoning, get some tutelage, for myself, learn what I don't know. I knew there's a lot to learn. Didn't understand a lot about the bonding market at the time and things of that nature. And Joe was a do-it-all agency,
What do you like about the insurance business?
Generally, for myself, helping. The biggest thing that I like helping people, but I like people who want to help themselves too at the same time. So that always interests me, rightly or wrongly. But like, I looked at like things like charity and things like that. It's like, well, it's good to have that. But one, it's hard to really sustain a family on that if you're basically running charities. I mean, I don't know, some states find a way to make it work, I guess, not to get off on topic. But I really liked that it was close enough to, I would say, the legal field where I didn't have to go to law school on it, because I actually wanted to be a lawyer at one point. And I did the LSAT, but at that time, I was probably going to be about 55 years old by the time I got done paying loans. So I was like, well, insurance at least deals with legalese, and I kind of get to deal with that side of it and stay in it, but I liked helping people. And so I was like, well, those two things can meet, and you can actually... Yeah. You can have a good job here in town. You can make decent money if you want to work hard. You can make decent money. And I get to go home to my kids every night. I'm still work probably too many hours, but it isn't like I was in the corporate world. We working 70 hours and your wife barely ever sees you and you never get home to kids. And
out in the ocean.
Yeah, that kind of, yeah, exactly. They never see you
On a
there.
boat.
Yeah, on a boat. Yeah. It's a little more home based here. And it was that I know my people. I know my clients, they can call them. All my clients have my cell phone, and so I like that. I wanted that aspect where, hey, this is why I really dig it, where you call me up or somebody calls me up and says, hey, I got this problem. Can you help me out with this? This issue, what do you think, Ray? This kind of thing. And that really always appealed to me, where I can actually give some expertise on, for lack of a better term, on that side of the field, which most people hate. I always make the joke that I'm fortunate because I like to do something that most people can't stand, and I tell other young kids when they ask me about future, it's like, if you can be lucky enough to find joy in doing something that most people hate, there's usually a decent career in that.
Yeah,
You know?
you can always have a job.
Yeah,
You can always make some money.
exactly. So
Yeah, there's a lot of truth to that.
yeah.
Yeah. You know, when I first went in the construction business, I did things that people didn't like to do.
Sure.
Other people didn't like to do.
Sure.
You know, like renovating old buildings, you know, where it's dirty, you know,
Yeah.
going up high in the air and working, you know, things like that. Roofs, nobody wants to do roofs,
yeah.
you know, I mean.
And not overly complicated either, but it's just really hard work too. It's
So,
like,
I mean, I just found, get more business doing things other people don't like to do.
certainly.
Yeah. Makes a lot of sense. So on the insurance business,
Sure.
Talk about the hard and the soft markets.
Okay. Definitely a hot topic. I'm sure everybody that's tuning into this or hearing this has noticed their insurance premiums have risen significantly since about 2022.
Yeah, crazy like. Yeah.
But like we've never seen.
Yeah.
And so a hard and soft market, and I guess if we're going to do insurance 101, so, you know, if parents have a hard time putting their kids to sleep, this would be the time to kind of put this on, I guess, because this is going to put some of you to bed. It works almost just like a financial market. Insurance is a market, just like stock markets go up, stock markets go down. If they go up, you know, it's called a bull market. You know, if things get rough, it's a bear. You know, insurance is hard and soft. Where a hard market is where prices are usually hardening or going up in price. The risk is going up, but mainly the risk tolerance of a company. Acme Insurance is saying, well, we're not comfortable with these risks and comfortable writing whatever is out there in the marketplace. We don't like these homes anymore, and they start contracting and the market hardens. Soft is basically where it starts basically going, hey, we're more comfortable, we're having a softer approach on these risks, and generally prices go down. It is somewhat cyclical, generally speaking, so it does react just like a market. It's not normally nearly as volatile as what we had seen in 22 all the way till today, where we've just seen it hard as a diamond. And in fact, this is actually, there are a lot of records on this, but this is the hardest market actually in recorded history as far as its length and as far as its increase and contraction and the availability of insurance. Yeah. It's actually the hardest. The closest thing we had to it was like the last couple of years of Carter's administration and Reagan's first like year and a half, where you had huge inflation spiral at that time. Yeah. And then there was some legislative action to kind of calm the insurance market a little bit. But that trick had already been tried, and there was no more really tools that we had for that. So that lasted only about 2 years. This was about 3 years going on, almost about 4 years for a really hard market where it was 28% increases, 25% increases year after year after year, and then even just hard to get insurance in a lot of places. Yeah, you know, and so that was unprecedented. So if you made it through it, you know, congratulations. It was you went through the worst. It was kind of like how in our industry we talk about it as we'll be the old people talking about the depression. Basically, it's like whenever I'm probably retirement age. Yeah,
and some reasons why the market gets hard.
Okay. So some reason for a hard market, at least I'm going to use back to the recent history of the 2022, 2020 till now. One of the main reasons was inflation. So if you remember the inflation spiral, even though it said, hey, it's 8-10% inflation, we all know basically we shop, we grocery shop, we were buying things. It was a lot more than 8-9%.
Yeah, in general, everything went up. Yeah, and building materials
by about 22%, and that's a big part of it. Yeah. And so building materials skyrocketed in their cost and availability. And so when you have if you have a roof off, you just can't sit and wait until prices go down or wait until something. You've got to move. You've got to get that put on. And so if there's no 2x4s to be had, or there's no basically, you can't order the trusses can't come in. That delays that claim, and more money keeps going out, more money goes out. So you had this big delay of claims getting settled or repaired. You also had a real lack of skilled labor at the same time as well during that, where to get the contractor to do the work,
it's going to cost more money.
You're 5-6 months out of any medium-sized job, probably a really big job. Most contractors at that time were like at least 8 months out, a year out from a big job. And so that also drove prices up. Then you add in natural disasters. That was a big part of it. We had these vector storms that is now that's kind of the buzzword, but basically it's kind of like a 4-letter word now for basically the underwriters and basically actuaries and insurance companies. if you recall this even like 2 years ago, and even last year, that March 14th date now lives in infamy for me. 2 years in a row, we had tornadoes rip through and really hit Medora and that whole area basically on March 14th, 2 years. And those are usually a couple statewide storms. You have this big band system that comes across Missouri, Iowa, Illinois all at the same time and hits with this ferocity where you're getting straight line winds of, 50 to 70 miles an hour sometimes. So that's causing a lot of damage. We didn't have that before. And so Tornado Alley is actually shifting to the east and to the north a little bit. If you look at the propensity of tornadoes, now it's moving north and to the east, where Tornado Alley isn't really Texas, Oklahoma anymore. Illinois now is the leading state of tornadoes in the nation.
No kidding.
Yeah. Yeah, it led it at least for the most part of 2025. I don't know if any other state overtook it at the end, but we were the largest in October for sure. And then They judge that, like the climatologists judge us on percentage of they would call it hail or tornado appropriate days, basically. And I would refer to it as basically conditions are ripe for it. Illinois, since 1979, has increased by 2.5%. Just over and over on this.
How about all the natural disasters, across the country? California, out in North Carolina, South Carolina. Doesn't that affect our insurances too?
It does, depending on, not all equally, though.
Okay.
And a lot of it depends on what kind of company you're with. And so if you're with a nationwide company that has a lot of risk, let's say in California, and they have wildfires and it really tanks that marketplace because they're paying out way more than getting, and California's a mess. I will tell you it's a mess. And they have a lot of risk out there, yes, you could see premiums increase and hardens the market because they're paying out money over here. Now, if you're a local mutual around here, and depending on, mutuals are very complicated in how they're structured for most people to understand, but local mutuals, if you're more regional based, like maybe you have a company that stays out of Florida or stays out of California and says, hey, we don't want that. Like I have one of those companies that they're everywhere in the eastern side. There's like only in 12 states, but they're very careful who they go into, what states they want to get involved in. And so therefore they're not really hit by many of those natural disasters. So you see more steady premiums over long term because they're not chasing the property values in Florida or California. They're not there after those bucks. They're like, oh, it's too risky to be there. We're safer here. So the butterfly effect is what you kind of refer to. Hey, butterfly flaps its wings in Florida. Does it affect my premiums here in Illinois? Depending on the company, yeah, there's some truth to that.
I see.
But it really does depend on the company. That's the question for the agent going, hey, is this how spread apart is this company? How deep are they in these risks?
So that's where the agent really comes in.
It can be. Yeah. Depends on, not every agent's the same, but yeah, then a lot of them have risk. We're licensed I have clients in Colorado, Missouri, Illinois, Florida, and so I have kind of get my ear a little close to the door, and they may have a state down in Texas or maybe license these other ones where they kind of see where their company base is, and they kind of get to know a little bit different information.
Do you have any good news?
I do have good news, yeah.
Okay, here's what we're going to do, because actually for this segment we've ran out of time.
Oh, okay.
So we're gonna come back next episode and we'll talk about, because I was relying on some good news. So we'll come back with some good news.
True, like an insurance agent, we hardly ever have any for you. So I do have some, so stay tuned, I guess.
Okay. Hey, it's a local spotlight show here at WJBM Studios in Jerseyville, Illinois, the voice of the Tri-Counties. I am Chris Lorton. I'm your host today. And back again today, Ray Roentz, the insurance man here in town.
By popular demand, right?
By popular demand. Ex-baseball player. Could have went pro.
Right. Maybe in Taiwan. I don't know.
Yes. And so, Ray, you've been in town for
40 some odd years?
43,
I think there's 43. Other than time in Alaska, this is where I've been.
Yeah. And you're married with children.
Mm-hmm. 3
kids.
3 kids, yeah.
Where'd you meet your wife at? In high school?
High school, yeah. I snatched that up pretty fast. Carla was she was from Wentzville originally, and then her parents got divorced, and she moved to Jerseyville, and so everybody was She was a girl that I think I was probably had to stand in line for a while. The first date that actually I tried to call her on, she actually said she's already had a date for that night, so I had to take a number and wait.
Okay, what was I'm always interested in this. What was the move? What was the thing that happened that she said, "Oh yeah, raise the man"?
Oh boy,
huh? Is there something that stood out?
You better ask her that question. I don't know. I wonder that every day.
What was your first date?
Probably Sadie. No,
I mean, where'd you go? What'd you do? Surely you remember.
It was
this.
a homecoming. Yeah, homecoming was like the first like real kind of date. Yeah, it was probably a homecoming dance. I think that day.
Is it the way you danced on the floor?
No. Actually, how we met really was I got a shout out to, remember Tom Van Almen, English teacher? At the high school. Okay. So he was English teacher, the Van Almens, Beth, and she was a year younger than me, Kyle, and said, anyway, he was an English teacher in high school, and then he thought, correctly or incorrectly, that I should be moved up to honors English at that time, because I was like, well, it's the same credits. I'm like, why would I do more work? I'm like, work smarter, not harder. So he asked if I should move to honors English. He said, you should be in there. And so I was like, okay. And well, because I kept seeing all the cheerleaders and Carla and all the rest of them going in there, and I'm going out of the class with, me and my other, paste-eating cretins, walking out there. And so I'm like, yeah, I'll take that deal. And then I happened to sit right next to Carla, is who I actually sat by. And so I owe a lot to Tom Van Almen. So thank you, Tom. Appreciate that. And so that's how actually we met. We actually, that's how we kind of got talking to each other more often.
I see. Mm-hmm. All right. And then homecoming date, she loved the way you danced.
We'll go with that. Yeah. It was so smooth.
You were in music too.
Yes.
All right. You have a family band.
I did for 15 years, yeah. 15 years, and it's hard to think about it like that, yeah. But I played music since I was probably 15, actually. It went full circle. My dad would sneak me in like VFWs and stuff like that and go play rhythm guitar, back in that day at 15 years old, go play a little bit here or there. And then later on, had my own band for about 12 years. Yeah. Fronted that for a while. I did a little bit of regional stuff like that, and an opportunity to play some pretty cool shows, do some pretty neat things, meet some neat artists, and then went full circle to the family band actually, where we were playing rockabilly music, like old Johnny Cash and stuff like that. That was a blast. We did that for 15 years. My father was playing drums, my brother was playing rhythm guitar and singing. Eric Decker filled in when Dad got sick too. Was playing. It was such a blast. And we had this really great bass player. Byron Bierman actually is one who started it. Byron, God rest his soul, started that after he was doing the bluegrass thing with Aaron and the boys, and Mike Groppel and Gary and all those that did Hickory Grove. And I think when that stopped, he picked up the phone and gave me a call and asked if I wanted to put something together. And he was the match that started all that. And then Dad got involved, and then Larry Sievers of old Radio Shack fame, he played the saxophone basically for us. And so we were all like one big family out there playing, and it was a ton of fun. We went up Springfield, different places. It was amazing. The people who heard of us and basically asked us to play. We got asked to play a gig in Minnesota one time, and that was a hoot. It's like, well, by the time airfare and everything else is done,
it only cost us.
Yeah, exactly. Got paid $300 and drank $500 of booze.
Byron Bierman's son plays with Matt Jordan. He's a bass player. Very good.
Oh, yeah.
They played at Rock the Block this summer.
I got to see him. Yeah.
Yep. We play their music here at the station.
I sat next to him and Brian Hutchins actually at Joe Kay's restaurant the other day, and I didn't even recognize, as Byron called him, the boy, as he always called him, Keith. The boy, is how Byron would say. And I didn't even recognize, especially if he was wearing a beanie. It was cold out. I was like, yeah, play bass. I'm like, holy cow. It's like I haven't seen him in 10 years up from on stage. It's the only time I'd seen him. So I got to connect with him a little bit, and Brian, and so he's very musical family. Yeah, he's doing very well. I'm glad to see he's sticking with it and playing.
Yep. Now, are your kids musically inclined?
My middle one, Rocco, is the oldest. Rocco plays probably a little bit.
Rocco?
Yeah, Rocco.
That's his official name?
That is his official name.
Rocco.
Yeah. My wife named him.
I mean, I love it.
I don't even get to name the dog. I didn't even get to name that. So I said I've been out of that, but I got to give her props. It's a cool name. But she named that right before she passed out after. So I couldn't go. Hey, when she woke up, going, we had a change of heart. Sorry, I tell you, it was a difficult delivery on Rocco, and so she named him that right before she took a quick nap. And it's like his name's Rocco, and that was it. And so
one of my kids, they at about 3 or 4 years old, they wanted to be called Rocco. Call me Rocco now. I don't know where that came from, but
yeah, it's a tough name to live up to. Like I said, either somebody wants to pat you on the back or kick you in the back too. So it's hard to say. But yeah, Rocco, Robert, and Loretta are my kids on that. But Robert is a little he practices guitar more probably than any others, but they all listen to music. But Robert, if he probably wasn't always playing basketball or baseball nonstop 24/7, he probably would be a pretty good musician. At least probably could play a little bit here and there.
Well, you played baseball.
He's he's much better than me.
Oh, is he?
Yeah, he's way better than I was at his age. What I learned. And this is what tells anybody else doing travel ball. We could do a whole segment on travel ball type stuff in sports at some point. But what I learned when I was a freshman in college, like I said, on a full ride, they're learning at age like 13 and 12 how to do specific plays, like as far as how to run in, which step to do, and how to do these certain barehanded plays and stuff that if you're athletic enough, you'll be able to get it done. No, that stuff's practiced at like an age 12 and 13 where they're practicing the diving and practicing those things that are elite, that we were considered elite plays and elite players. They're doing that at age like 13, and he does it well. And switch hitter, hits home runs from both sides of the plate. Wow. Little Turd's already hit more home runs in his career than I had my whole entire baseball career. And he's only 15. He had two.
Sounds impressive.
I know. He had 2 grand slams in one game, one from the right side and one from the left side. I'm like, I'm proud of you, but I hate you at the same time, kid. That's something, that as a ball player, that's something you would only hope to have happen to you,
That's a lot of work. I mean, a lot of traveling. Kids are traveling. That's a lot of work for the parents.
It is. It is. I'm glad I have a career that can do that, but it comes at a price. I mean, yeah, you feel like you just hand your checkbook over to whatever organization you're playing with and go, here, tell me when it's over, half the time. And it's expensive. It can be fun. It can also be nerve-wracking for a lot. It just depends. Like I said, you better know what you want before you jump down that rabbit hole. So kind of my advice to players and parents when they ask me about it. As I coach for youth sports like 9 to 10 years, and I said, you better know what you want on this and be careful what you ask for. You might get it.
How many kids, what do you think the percentage of kids that get heavy into traveling they actually make it in that?
Define make it, though.
Huh?
Define make it. You mean end up in the MLB?
Okay, end up maybe getting a college scholarship. I would call that making it.
Okay. I would say probably on that travel side. And again, there's different levels of travel ball. It's just like the minor leagues. You have travel ball A, double A, triple A, and you have majors. Okay, so those that are playing in the majors, the major like tournaments and the playing triple A majors, I would say you're probably looking 10-15% of those, so higher than what I think people would think. But there's a lot of things that player can do to up those numbers a little bit. For instance, if they have a good GPA and they're really good academic, like me, I went on a full ride baseball scholarship, but it really was an academic scholarship. My baseball coach basically, like at that time, like walked me around the admissions office and was like, okay, give him this one, give him that one, give him those. Like basically going to a grocery store and he was picking out basically the scholarships I had because I was academic. I had the academics that could justify it. And so if your kid has a high GPA and has a few other attributes, you'll get a lot more academic scholarships. That's the way it used to be. From what the high school coaching I did do, that's still very similar to what it is because it's a safer risk for the coach too. You don't want to give scholarship money to a kid who can't carry at least a C average. Because now your kid's ineligible if he drops down to a D.
Unless he's really good.
Exactly. And so if that kid tilts the field, so to speak, he'll play somewhere. But generally, a lot of those kids, they will find a place to play, whether it's a small, NAIA school, Division III, or whether D1. D1's a totally different level, especially looking like SEC and things like that.
Oh, yeah.
We see a few. I mean, Edwardsville is not that far away. The same talent can exist in these different, just the coaching and basically the amount of attention paid to it is a little different there. But, our kids here, they can play with those kids down there, and they compete against them, and they hold their own with them, and they're on the same field, and they win state championships.
Hey, if you're just joining us, I've got Ray Roentz with me. He's actually an insurance man in town, but thinking about getting into being a sports agent for kids. Because he knows the ins and outs. Okay, here's a question I have. Here's a question I have about it. Before we got to talk about some insurance, but before that is, if you take all the time and money that a parent spends running their kids all over creation, all right? Mm-hmm. If you take that and just take that money and time, and wouldn't it be probably easier just to pay for the scholarship?
100%.
That's what I think. I was like, I mean, especially if only 85% are even going to, even be able to be good enough to get a scholarship.
Certainly. I mean, so let's say your kid, because this is what most people don't think about too, is it isn't always the best players actually that got, and once that's the same with travel ball too. Don't think it's always the best players to do travel ball. You also got to have a lot of money to do that as well too, to keep funding that out. And so it's the best player may be even drafted or may even get into that college, but you right before, let's say the senior year, blows out his rotator. Yeah. You're done. Now you, like I said, I mean, done for at least a year. So it just depends on the kind of injury. And so there's no guarantee. So yeah, if the choice is between putting in a savings account or 529 or something like that, yeah, do yourself a big favor, put it in 529. If that's what the kid wants too. But like I said, that kind of lifestyle, and I try to tell this to my middle boy, is like, yeah, 100% on that. That's what he wants to do. Wants to go be a college athlete if he even wants to go to college. He said drafted or go to, that's what I want to do. God love him for that. Okay, but having been there myself, like I said, we came from, my sister was probably the best athlete in the family. She had a full ride for basketball, long before anybody even knew what I could do at all, and still her athletic accomplishments still blow mine way out of the water. But college athletics is no joke. That is a full-time job on top of your full-time student job, and every aspect of your life is managed and owned by somebody else that's giving you a check that you actually don't even get to see, by the way. And so it's different. It's a hard life, and so I better make sure the kid's up for that because it's constant.
I think the parents probably want it more than the kids do sometimes.
I've been a coach for like 9 years. Yeah, I can agree with that for the most time. Now I had really good parents most of the time, almost 100% of the time. But many of the parents, look at it from the aspect of, well, if they just try hard enough and try this, then they'll definitely be good. They deserve this or whatever. Like I kind of said, deserves got really nothing to do with it. The hard work may make it justified for you to get the good things that come your way, but it doesn't basically mean you're going to get it just because you work so hard. Like I always use this analogy: a mule can run as hard as he wants, but he's not going to win the Kentucky Derby against a thoroughbred.
Exactly.
And so you got to know what you're up against, know what your attributes are. But that's why I love baseball, because a guy like me, my size, basically can go. You can become an MVP in MLB. And you can. Baseball doesn't matter based on some of those attributes. If you're slow, fine. You better be able to hit. If you can field, but you can't really hit real well, you better be able to field real good. If you can pitch, you got different skill sets that actually fit within the framework of a successful team. Whereas I would say kind of football, bigger, faster, stronger is what makes you a better football player, in large part. Not to take away from the skill sets of receivers and things like that, but, I'm probably never going to, I wouldn't be a quarterback. There's no way, as far as I might, I wouldn't be able to see over the offensive line. So there's no way I'm going to.
You never know, right?
I would need Shane to Shirley pick me up and throw me over the line first.
Hey, insurance. You said last episode, you said you had some good news about insurance.
Yeah.
Okay. Share the good news.
I haven't been able to say anything good for like 3 years. The market is softening. All indicators are telling us the market is softening. I'm seeing it on the premium side as well.
That's the most important side.
Yes, for most people. There's a good and bad here. That's mostly good. The market is softening, and you see it usually in the commercial market. Usually reacts first on the commercial side. And so for people who own a business like yourself, you'll see we're seeing premium reductions now for the first time ever, where we're seeing like the average is like 2% to 4%. There are some outliers in 8%, but really what we're seeing is an opening of the appetite where there's companies that would have said, no, we're not interested in that company or this business or that type of business class, not interested at all. Now they're opening up and saying we would like to have that again. And so the market's softening, which means the premiums will go. Commercial happens first, usually personal lines and follows. You're starting to see that on the auto side now too. On the auto side, you're seeing the prices drop a little bit on the personal auto side, but it's not widespread. So you only have about 5 companies right now that are extremely aggressive on premium right now, where they're really trying to they're hungry for business in a major way, and they're trying what we call in our side of the desk buying out the business. They're trying to buy the business by premium, and saying, hey, our premiums are so low, say no to us if you can, type of thing. The other 95% of the marketplace is kind of sitting back, watching first, going, it's kind of like the first rabbit to cross the open meadow. Is it going to get eaten by the fox or not? Going to see what's happening here. They're a little bit cautious. We'll see if it works out. We'll see. They haven't really had much lengthen it yet, but I don't know if they can sit back on their haunches for very long.
So would you say in insurance, for somebody that's shopping insurance, there's a lot of different choices out there? Do the companies vary a bit?
Yeah, definitely. Yeah. Definitely different choices. It isn't all the same. So, sorry, Progressive, it is not like going through a supermarket and picking up a box that says RV insurance and that like it's all the same thing. You definitely gotta talk. In my opinion, the best way to do it, obviously, is to talk to someone. It doesn't have to be me, obviously. Jerseyville has a ton of great agencies and a ton of great agents around here. Talk to your agent right now and ask them, what concerns you. Tell them what concerns you and ask them, hey, is this policy efficient for that? Not all policies are created equal, by far. There's some, especially on the home, there's so many wide variances on the coverages on what you should have versus maybe what somebody else should have. Same with auto.
And the one thing I really like about Jerseyville agents, and I know a lot of them and have worked with a lot of them, they're pretty honest. Like, hey, Chris, I just want to let you know, I can't do that. But I tell you what, Bob over here, I think he can. They're doing a lot better job at their hands are tied on what they can what they can work with.
That was a pleasant surprise, and not the world I came from, AIG, where everything was kind of cloak and dagger. When that was another reason why I was happy to basically build a career here. Is by and large, everyone kind of treats each other pretty well. The agencies wise, we don't basically, Denny Ford hasn't ran me off the road yet, and that stuff, and then me to him as well. Everyone basically understands there's a place here, and we'll try to, we understand their skill sets here, and things do ebb and flow. There's a time, primacy never lasts, is basically what I would say with that. But to get back to, yes, there's lots of choices in coverage. There's also wide variances in premium now, too, on the coverage. The bad side of that is that most of the companies that I said, hey, they're most aggressive on the pricing are also offering I would say, probably the lowest level of claim service right now. It's really difficult, and there's layers and layers and layers upon that you got to go through. So there's a lot of rigmarole you got to go through sometimes with this, and the agents aren't as... Like, there's companies that I can be right involved in that claim from the day one, and me and the adjuster can have conversations and the client all on the same phone and get them all in one conversation. And there's other companies that will just, nope, chatbot only, send me an email, don't talk to me.
Okay, of all the insurances you got, fire insurance, tornado, flood, earthquake, liability. What do you think is the insurance that you really need to put some thought into?
If you have a business, it's liability, for sure. Landlords, liability. That's the most expensive one that you're going to have. If you need it and you don't have it, life changes for you after that.
It's going to cost you.
It's going to cost you big. Yeah. And I don't know what that number is, but it depends on the claim you might have. That's the one you want to put some thought into to protect your business. If you have a business. Same with the auto. Like I said, no one wants to think about basically wrecking a $50,000 vehicle. But remember the claim that the person could, let's say you injured or someone says you injured them, that price tag is going to have probably a few more zeros on it, than just that $50,000 truck that you have. Just putting things in perspective.
Right.
And so the good thing is that liability is cheaper than obviously full coverage because a truck might be expensive, basically to insure. And so liabilities, I would say, and I think most insurance agents would agree, liability is the most important one to have because it protects your assets and what you have.
Really, it's the best buy. I mean, it's what you have to have, and really, it's more reasonable than the other insurances.
I would agree.
And what it's going to cost you. And you think, well, this is what's going to cost me insurance. This is what's going to cost me if I have to claim.
Yeah.
So
it's the umbrella, what you're talking about, a pure liability policy. That's probably the best value and most undersung policy in insurance. So anybody that's got assets, especially if you're in asset protection mode, if you're past your prime earning years, let's say you got your nice house, let's say you're past that, where you're not. Let's say you're 65, you're at retirement, and you're trying to protect what you got, right?
Yeah.
Okay.
Yeah.
If you're in that situation, the best value in insurance, and I'll debate anybody on this one, is an umbrella liability policy. $1 million of extra liability that would sit above all the other policies, that costs you, depending on what company you're with, always usually under $500, and usually, like, a lot of people I insure, they're like
$500 a what?
A year.
Yeah.
A year. Like, most people, they have $250, $300 for $1 million of liability.
That's like $40 a month.
It's
to have $1 million.
It's nothing.
Umbrella liability.
And as I said, if you needed it and you don't have it, your life is different after that. You may have had a nice house. Now it's with all the things you had, and the umbrella liability policy helps you keep all the things you currently have and pays for that claim. And you can get $1 million, $2 million, you can get up to almost $5 million for an umbrella liability. And an agent didn't tell me to buy this. It was my financial advisor that I had before I was even an agent that told me when I had my second kid, and he was like, "Hey, I'm looking at you on paper. This is something you need to have." And I was like, I thought it was going to cost a ton. And it's like, $1 million? How much is that going to cost? I was like, oh, it ended up being less than $200 a year for me at the time. And so now it's like now I got a 17-year-old, so that's a little rougher now. But, it's still a huge value. Because if I need it and I don't have it, you're going to see me work even more hours now.
Yeah. What other insurance that we need to pay close attention to?
Depending on where you're at, flood is a big one. Flood's a big one, depending on where you're at.
Jerseyville, got to worry about flood?
Well, if you remember July. Yeah,
but it's probably a lot cheaper here than it is
certainly
next to the river.
Yeah, some of the businesses in Grafton pay a pretty heavy premium for that. I insure a few businesses that have to have it, and it gets a little pricey. Yeah. And they have to have it too because they're usually a loan with that business. But here in Jerseyville, a flood policy was what you would have needed to pay that out, and it's generally speaking pretty cheap. I mean, you're talking. Typically, a flood policy would say you had $50,000 on a house here in Jerseyville, which isn't anywhere near a flood zone.
Well, if you have a finished basement.
True.
Because our water tables are so low here.
Yeah. And there's different kind of coverage. That could be sewer and water backup. A true flood, like a lot of people had it just coming from the windows, basically, in their basement, or from the doors, or from the cracks in the concrete. Geez, those are like $300, $400 a year total on that.
You got to get that.
Yeah, it's a good value. So those are the kind of insurances and cosmetic damage. There's all sorts of different things that you can look at. It all would depend on your situation. So I say just talk to your agent, ask them, hey, here's this, but here's my situation.
Tornado insurance.
Tornado is included in almost every single homeowner's policy, but you want to make sure that in my opinion, you want to make sure that your homeowner's policy, if it has a percentage deductible on wind and hail, like many of them are now, where let's say your deductible on a homeowner's claim is $1,000. That's your skin in the game. Let's say fire happens, wind, hail happens.
Right, gotcha.
Okay. But if it's a windstorm or a hailstorm, maybe it's a percentage deductible. 1%, 2% in some cases I've seen, some even 5% for some of these companies. So the premium may look real good. But let's say that your home is insured, let's say $500,000 home, and you get a 1% wind and hail deductible. That means you got a $5,000 wind and hail deductible. But if you got a 2%, now you're $10,000 into it before you even get any coverage on that hailstorm. And so those are kind of the devils in the details you want to look at. And so the premium everyone cares about. That deductible is some of those things basically you want to look at and go, whoa, hold on, what's this percentage? And as home values increase, so does that deductible increase. So that's a good conversation to have. That's a way to protect yourself and ask, how much am I really putting myself out here for? What skin do I really have in the game?
Yes. Ray, it's been very informative.
Thank you.
Having a chat today.
Yep.
But believe it or not, our time is over. We've got to get on with the other things.
There's nothing else but insurance.
I know you've got to get back to the office.
I've enjoyed it, yeah. Usually no one wants to hear anything I have to say about insurance.
But thanks for coming in. It's been a pleasure. You take care.
My pleasure, bud.